The stock market is what most people think of when they want to invest. To many, investing in stocks is the way to earn that passive income and buy that dream car, house, or even go on a vacation. Irrespective of your reasons, investing in the stock market can make those dreams come true. However, you also stand a risk of losing all your investment in stocks. Yes, stock investing isn't all rainbows and unicorns. There are rules and tips to follow as a beginner. Before we move into these tips, let's understand what the stock market is all about. Understanding the stock market. You're definitely eager to get your money into this venture. What's the rush? Let's explore the basics of stocks. Companies, in a bid to raise money for expansion, often sell off a percentage of their ownership in the form of shares. They are only able to issue shares through a process called Initial Public Offering, or IPO. Buying stocks is a way to own a percentage of a company through shares. This doesn't mean you get a seat or share the same position as Mark Zuckerberg or Tim Cook. Rather, your return on investment, or ROI, comes from the profit of your bought shares. Most times, you buy and sell stocks through an investor who acts as a middleman between you and the company. Investors, in turn, connect to stockholders who handle trades through the stock exchange. Now, you have a firm grasp of the basic operation of the stock market and stocks. Let's move into the steps of how to invest in the stock market. 1. First, know your preferences. Do you remember when we discussed your reasons for investing in stocks? For some, this is a great form of passive income, and they prefer a hands-off approach to the stock market. Here's a simple explanation of how this works. Those in this category prefer to have experts, which in this case are brokerage firms, to handle investment decisions. On the other hand, we have those who prefer to directly get involved in their stock investment plans. Basically, they are interested in choosing stock funds and stocks for themselves. Do you have your preference in mind? Yes? Then get ready for the next step. Step 2. Open an investment account. Once again, we're faced with two pathways, the DIYs and the passive income lovers. Let's start with the former, the DIY option. For those in this category, get a brokerage account, specifically an online brokerage account, since it is a less expensive and faster means of buying funds and stocks. At this point, you can either get your broker to open an individual retirement account, IRA, or open a taxable brokerage account. Irrespective of your choice, choosing the right broker is crucial to the success of their investment plan. Choose brokers based on factors such as investment selection and costs, account fees, and trading commissions. Online brokerage firms such as Merrill and Ameritrade are great options for stock beginners. For passive income options, a robo-advisor reduces the stress of individually selecting stock options. These types of companies offer complete investment management. In fact, your investing goals are all they need to help build a portfolio to achieve those goals. Thinking about how expensive this option is? Don't fret. The robo-advisor fees are just a minute fraction of the cost of hiring an investment manager. Most times, the fees fall between 0.25 to 0.50 of the total assets of your investment portfolio. For those who prefer a hands-on approach, let's move to the third step. Step 3. Knowing your territory. Before you splurge money on certain stocks, it doesn't hurt to know more about what you're about to purchase. Stock investment is actually not complicated, as long as you understand the terrain. So let's explore the two main investment types: exchange mutual funds, or stock mutual funds, and individual stock. For the former, you have the advantage of automatically investing in stocks across different industries. However, you're most unlikely to gain a massive increase in stock values as opposed to buying individual stocks. On individual stocks, you can buy individual stocks in a specific business. You can either buy a single share or groups of a share if you desire a higher profit margin from your investment. Well done on getting to this step. This is the point where you decide your amount of investment in stocks. Step 4. Set a budget for your investment plan. As a beginner in stocks, ask yourself the following questions. 1. How much do you need to start the investment venture? 2. How much money should you invest in stocks? The first question is dependent on the price of an individual stock. Sometimes the price of an individual stock can be as low as a couple of dollars and as high as a six-figure sum, such as Berkshire Hathaway, which costs $300,000. ETF is the right step if you, however, want a mutual fund stock with a low budget. These sets of stocks often have a minimum of at least $1,000. Are you contemplating about the amount you want to invest in stocks? Well, get in here. Here's the basic idea of getting the most out of your investment. For those in their early years, a recommended large percentage of their funds are best invested in stock funds. For instance, you can choose to keep at least 80% in stock funds and get the rest in mutual funds. Users are advised to keep at least 10% of their total investment funds due to the high risk of individual stocks. This brings us to the final stage. Yes, it's the reason why you clicked on this video in the first place. Step 5. So, start investing in stocks. Stock investments are filled with a lot of statistics, indicators, patterns, and even predictions based on mathematical models. These strategies might look daunting to a beginner. Once again, don't fret. Some of the most successful stock investors have earned their revenues by just following the basics. According to Warren Buffett, investing a large percentage of your funds in mutual fund stocks is one of the safest yet most rewarding ways of investing in stocks. What's more, only invest your funds into individual stocks if you believe in the potential of the company to reach new heights. Remember, build a simple portfolio that spans across various industries and niches. For more enlightening videos like this, kindly click the subscribe button to receive notifications. Let's know your thoughts on these steps in the comment section below.